Real Estate does not necessarily represent the views or opinions of the staff, management, or ownership of this station. It's time to get on the right path with Right Path Real Estate Radio with Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today. Get ready. The guide that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Bible.
Hot mics.
Welcome to the show. Jason Bible, Right Path Real Estate. Had a great weekend. A lot of you guys and gals that play fantasy football, I am sure you had your drafts this past weekend, if not this week. Preseason is coming to a close, so get those teams drafted. So I was out this weekend. Flew out Thursday night. Hung out with my buddies all weekend. There were 12 of us. We had a great time, played a little golf. Hung out, had some great food. Sampled some draft beverages from different parts of the country. Just a great time. And I'll tell you what, one of my big fears in these things, especially when I get around my buddies, the whole time in the back of my mind, I'm thinking, just don't beat these guys up with real estate stuff. But what inevitably ends up happening is they're like, hey, Jason, tell me about how this real estate thing works again. And I'll start just like this. I'll say, look, man, you need to buy one house a year. Like, I can get into the whole spiel of why, and you should buy more than that and all that. But look, at the end of the day, just buy one. Let me put this to you this way. Your future self will thank you. A lot of these guys are building businesses right now. There's a couple of them buying businesses. Some of them are buying into practices, all that sort of stuff. They got all kinds of stuff going on. So I'll say, look, while you're doing that, you don't need to jump in and do real estate and buy a gazillion houses. Just buy one a year. Now, here's a dirty little secret. I know if they buy one a year, they'll end up buying 5. So I'm like, look, just buy a house a year. That's all you got to do. But here's the fascinating thing. When we start talking about financial independence and what that looks like, a lot of people say, hey, there was a great discussion we had. We were at this brand new Omni Hotel, absolutely gorgeous. And we were up by the pool and the bar area there, and they had one of those fire pits. There were 6 or 7 of us hanging out, and I'm chatting with a buddy of mine who also is a small business owner, owns a number of small practices around town. And we started down this road, and I love this discussion. Let's just call this, for the sake of the radio discussion, let's name this guy Bob. We'll say, hey, Bob, what is it you want to do? He goes, oh, man, I love what I do. I get to run my business. I do a little teaching and education on the side. It's great. Do some consulting for owners in my industry. And I'll say, hey, let's do this. Let's wave a magic wand, and let's say you win the lottery. Now, I will tell you this. The folks I hang out with, and these guys are no different. If you were just an outsider looking in, these guys have already won at life. I mean, let's just be brutally honest here. All of them are wildly successful when you compare them to the average. Every single one of them are crazy successful. So it's fascinating whenever I ask these questions, because to random observers, these guys have already made it. I mean, they've got the life, right? But you'd be amazed how many people have the same challenges in their life. So I asked him, hey, Bob, wave a magic wand? What would you do? And his answer was fascinating. He said, I wouldn't work as hard. And by hard, I mean as many hours. I'd probably scale my business down to where, because he said, I love doing what I do. I just work a gazillion hours. And the reason he does is he's building. Like everybody in this group, they're all 10s at building and scaling and hustling. I mean, they're just, foot down on the throttle. They've got their eyes on retirement. And they got their foot on the throttle for 25 years. Like and I suspect a lot of you folks that listen to this radio program are doing the same thing. And he said, I love what I do, and I don't really envision myself retiring. I'd love to just work a little less. Get to play a little more golf during the week. Get to go to a couple of more recitals and plays and drop the kids off at school a day or two a week. Just a little less of what I'm doing. But I like what I'm doing. But I also realize that I've got to build all this stuff up now so that I can be financially independent in the future. So then I love to ask this question. This is a nuclear bomb question. And the reason I love asking it is because it really it brings the idea of financial independence into the real. And I'll ask this question. Bob, what's the number? Well, what do you mean, what's the number? Well, I want to make as much money as I can. I said, yeah, I realize that. But there's a number that you say, I've got enough. There's a great book I'm reading. Now, I will tell you it's about 25 years out of date. At least the advice is, but the themes in the book are great. And it's called Your Money or Your Life. Their investment advice is way too outdated, but the theme of the book is excellent. In fact, their investment advice is treasuries and government bonds, which you can't retire on anymore. I will get into that later in the show. It's a fascinating trend. So what's the number? I mean, that's really what it comes down to. A lot of folks will say, well, as long as the amount of money you have coming in from your passive investments exceed your monthly expenses, you are financially free. And technically that's true. But we got to have some safety margin in there, right? Got to have a little safety factor in case the market changes. And we can have a debate on what that number looks like. Some people say you should have a 50% safety margin, 100%. Got to have a safety margin in there for something. So the question is, what's the number? And in this book I'm reading, it was just fascinating. It had this great quote, and I don't have it sitting in front of me, but it's something to the effect of, men want to feel rich as compared to other men. I thought, isn't that great? That's really what it is, because once you go up to the next level, then you're thinking, oh, well, this is a whole nother level. I want to go above this and above this and above. And then you look back at your life and you've been working for 40, 50 years and you say, wow, I really wish I could have taken a couple of months off and done this, or I could have done this for an entire summer. I was just chatting with a buddy of mine before the radio show, and he's got a real estate investment company, and he is going to end up spending a year in South America. Not everybody gets to do that. However, you've got a choice, and financial independence is a choice. It's simple to understand, but it's not easy to execute. It's simple to understand. What's the number? What's the number? And then once we figure out what the number is, the question then is, how quickly can we get there? So let's say I've got a family in front of me and they say, Jason, we spend about $100,000 a year. How much money do we need to retire? I'm like, well, here's what all the experts say. It's about 25 times your annual expenses. You need $2.5 million. That assumes that you only withdraw 3% at the time of retirement and that your investments are making 7% a year. Your return on your investment is at least 7%. What's the problem with that? One is you're continually eating into your nest egg. And the second is 7%. Boy, you've got to save a long time. So it's fascinating as I'm going back and I'm reading all of these investment books. The oldest one I've read in the last couple of months was written in 1953, if I remember. And this most recent book I'm reading was written in the 80s. And here's what's fascinating. They all recommend financial instruments.
2 minutes.
Some mix of stocks and bonds. And the fascinating thing is, as we move closer to today, we move more out of bonds into stocks. And the question is why? Well, because the returns aren't as high. So we increasingly move from less risky to more risky financial instruments in order to get a similar rate of return. I find that absolutely fascinating. In order to get the same amount of return that we got 50 years ago, we have to ratchet up our financial risk. This is not specific to one era. This is not pre-post crash. This is 50 to 60 years now
1 minute.
of progressively increasing our risk in the years in which we have to take the least amount of risk to get an adequate return to retire or to become financially independent. None of these books talk about real estate, by the way. I'm doing that on purpose because I want to see what is the trend for what America is investing in for retirement and financial independence. When we get back from the break, I want to talk more about that. It's Jason Bible, Right Path Real Estate.
Mike's off.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are you looking for an
1
investor-friendly
minute.
general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
This is Business 1110.
All right, Jay, you ready?
Yep.
All right, here we go. Hot mics.
Welcome back. Jason Bible, Right Path Real Estate. I love reading all these old finance books. Shouldn't call it, they're personal finance books is what they really are. It's fascinating to watch and to read. 50, 60 years ago, you could sell the farm or at least saved up a lot of money, park it in a CD or some kind of government bond, and retire. You could do that up until the late 80s, early 90s. With some relative ease. I mean, you could see the trend was definitely downward on rates. You know what's scary? If you retired in the 80s, early 90s, and that was your retirement plan, was government bonds. It just, it's fascinating for me to watch the financial instruments of yesterday, meaning the last 50 or 60 years, essentially thrown on the scrap heap of investment options. How much longer is it going to be where what we're doing today will not, we as in investing in financial instruments, is not going to work tomorrow? I'm watching what's happening to Tesla right now. It's amazing. Absolutely amazing. You see what's going on in Venezuela, which I think they've been predicting the downturn in Venezuela for decades. Turkey has been a disaster for 15 years. I think Venezuela, I saw an article, I was trying to pull it up before the show. Their currency is being devalued once again by 95%. That's incredible. Now they're going to back their currency, and I don't even completely understand this. And I like to think I'm a relatively savvy guy when it comes to high finance. They're going to back their currency with a cryptocurrency that's tied to a certain extent to oil. Which I've read it a couple of times, and I can't even understand it. So I can't imagine the people of Venezuela are much better off. But that whole country is turning into an absolute dumpster fire. It's amazing what these financial instruments act when you really dig down into them, what they really are. And you know what's amazing to me? Those of us who invest in real estate keep pounding the same drum. Just go buy some single-family houses and avoid all of this nonsense. if you were looking to retire in the 80s and you went into neighborhoods here in Houston and you bought a handful of properties and rented those things out, you would be much better off. There's an article, there's probably, my guess is, there's going to be a slew of articles that come out here in the next week or so. This will be the largest or the longest bull market in the history of the United States. Wednesday will mark about the 10-year mark. Or 9-year mark, 9-year mark. The stock market has risen 319% in the last 9 years. Now, on its face, that sounds like an enormous number. Oh my gosh, 319%, man, that's crazy. But that's over 9 years. So let's take 319 divided by 9 is 35% per year, assuming you pick the right stuff in your index fund. 35% per year. It is not uncommon in real estate to get 10 to 20% return on cash, not including your total return. I'm going to do some real quick math for you guys. Houston, Texas, the median appreciation is 6% a year. For a $150,000 house, that's almost 10 grand a year. If you're out of pocket $30,000 on that house, 1/3 of your first year's return is appreciation alone. That's 33%. Add on top of that the cash flow at another 10 to 20%, and you're blowing that stock market return out of the water. It's not even close. It's not even close. And you know, the crazy thing is, we buy properties that cash flow. You know, one of the few major markets you can still do that in. You're not buying cash flow in real estate in LA. You're not buying it in Chicago unless it's literally the worst side of town. And you're not buying cash flow in real estate in New York. Those are the three bigger markets in Houston. You can still buy cash flowing real estate in Houston, Dallas-Fort Worth, and San Antonio. And if any of those other markets are an indication of what the future is going to hold for Houston, we're not going to be able to buy cash flowing real estate forever. Prices will rise so much that you will unable to be able to cash flow that piece of property based off how much you paid for it. We'll be buying on appreciation alone in the next somewhere between 10 and 15 years. And a lot of people say, well, Jason, why is that? It's real simple. If houses continue to appreciate 6 to 7% a year at the median, in about 10 years, they will have doubled in value. That $150,000 house in Katy that rents for $1,500 a month will be a $300,000 house that rents for $2,000 a month and will not cash flow. That is absolutely going to happen in Houston, Texas. It's just a matter of time. The only thing we're debating right now is when. Does it happen in 7 years? Does it happen in 17 years? Here's what I can tell you. It's going to happen. The only places in Houston, Texas that will produce cash as a rental property will be the worst sides of town, because those areas typically don't appreciate unless they go through gentrification. So where will you be investing? You can still buy those little houses in Katy, Texas for $150,000. They cash flow a couple $100 a month, and they will double in value 10, 15 years. Let's call it 20. Maybe it's 15 years. I don't know. You pick the number. Doesn't really matter. At 6%, if they continue to appreciate at the median at 6% in a little over 10 years, they will double in value. Meaning, if you buy 10 of those properties and hold on to them for about 10 years, just on appreciation alone, you will make $1.5 million. Let's say you're $30,000 out of pocket on these properties. We can show you ways where you will be less than $30,000 out of pocket, but for the sake of argument, let's say you're $30,000 out of pocket. You pay $300,000 for 10 properties. And they go up in value by $1.5 million, meaning your net is $1.2 million for a $300,000 investment. That's a 3x return, 300%. Plus the cash flow, depreciation, mortgage pay down, and if you bought with some equity on the way in. A lot of our members are buying houses, say the house is worth $150,000. They're all in at $125,000. Some are all in at $100,000. You buy at $125,000, you've got $25,000 in equity on day one.
2 minutes.
I'm looking at the case study we had this past Thursday. Mark was all in at 2.7. The market value is 3.9. He picked up $1.2 million in equity in 11 months. That's you're not going to be able to do that in any other asset class. And here's the other thing I can tell you. Real estate is not a game of fad investing. If there's one thing I've noticed when I read through all these books, it's one fad after another. And the fad lasts for 10 to 20 years. Invest in government bonds. Invest in equities. Invest in currencies. Invest in commodities. Invest in REITs and all this other stuff. Go to the hedge funds. Do cryptocurrency. Passive index funds. All that stuff. You know what's amazing? When you look at it through the lens of time, they all fall out of fashion. It's not really, it's not investing. It's quite literally like fashion. It's like the newest, coolest car. And you drive it for 10 or 20 years, and you pray that it gets you where you want to go, and then you move on to the next thing. You know what never falls out of fashion? Real estate. We get back from the break. We'll talk more about real estate. It's Jason Bible, Right Path Real Estate.
Mic's off.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Hi, Clint Coons here, attorney and avid real estate investor. You know the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
Do you have cracks in your brick? doors that stick, or sheetrock that's coming apart, then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when.
That's awesome,
Call
Jeff.
Foundation Check for a truly independent,
Yeah, real
unbiased
estate investing is buying
foundation
real estate.
evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary peer work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before every repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any
All right, 30
investments or
seconds.
give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
This is Business 1110.
All right, here we go. Hot mics.
Welcome back. Jason Bible, Right Path Real Estate. We're having an interesting discussion on my Facebook page about Subject 2 deals. Just because I got emailed some stuff. I was clearing out my email box. I was gone all weekend. Didn't check a whole lot of emails. And, yeah, it's interesting. You know what's fascinating is when you really begin to understand the math behind all that. And the math isn't hard. I mean, it's really not. But you got to start out with the number. Where are we trying to get to? What's financial independence look like for me and my family? Now, I interact with a lot of real estate investors, shouldn't call them real estate investors because that's not really what they are. They're real estate business owners. That's a completely different thing. This radio show is for real estate investors, not for real estate business owners. If you're a real estate business owner, you're building a business and using real estate as that vehicle, flipping, wholesaling, lending, doing some landlord activities, buy and hold properties. That's a completely different game. You're really just trying to build this empire, if you will, and run up the score. But I'll tell you, the investor side makes a lot more sense. And it seems like whenever I read any of these financial education books, it's always, what's the next newest, hottest thing? Since Vogel got on board and started his Vanguard funds, you can see the ramp up of index funds. That's when you really get down to it, that's what everybody's investing in. There's a great article here. Let me see if I can pull it up real quick, where it talks about, here it is. Oh, no, that's emerging markets. Sorry. I was going to get into emerging markets on the radio show today, but I think I put everybody to sleep. Fascinating. Goldman Sachs did this great little report and looked at where's all the profit from the S&P 500 come from? All the companies that are in the S&P, where is all that profit coming from? Goldman makes a striking revelation, as shown in the chart below. The information technology sector, which contains the bulk of superstar firms, accounts for 60% of the increase in S&P 500 profit margins over the past 20 years, while the adjacent tech sector, comprising the healthcare, including biotech firms, in consumer discretionary sectors, including firms such as Booking Holdings and Expedia, accounts for 40% of the rise. So let's distill all that down into something that makes sense. It means that the bulk of the market, i.e. all firms, excluding tech, healthcare, and consumer discretionary, have seen no margin growth at all since 1998. Which really means that the bulk of the returns for the last 20 years in the S&P 500, stuff that you are investing in, if you're invested at your job, the HR person's the one that gets to, the HR benefits people, the ones that get to pick the family of funds you're allowed to invest in. They're all investing in all this stuff. So for all intents and purposes, there's been no margin growth since 1998. Yet the stock market since 1998 has been has just exploded since 98. Question is why? It's because everybody is buying the same group of stocks. We're all buying the same stuff. That's what's happening. And we're doing it trillions of dollars at a time. We have too many dollars chasing after too many stocks. In fact, the really smart guys and gals that are running some of the largest companies in the nation are buying back stocks, allowing few of them available for purchase, which continues to increase the value of those stocks. Stocks are increasing in value simply because more people are buying them, not because those companies are more profitable. There is a great article, if you guys want to read it, called Index Investing is Garbage. And it's on a website called Dark Bid. And he breaks down, it's not him, it's I believe the guy was out at Harvard, who did a valuation of stocks going back like 60 years. People are chasing fashion. Look what's happening to Tesla. These problems at Tesla didn't just start. People could actually read financial statements. We're looking at Tesla's 10Ks, and they were saying, hey, wait a second. These guys are really making money from subsidies, not selling cars. In fact, there was some great analysis that figured out how much they were valued on a per-car basis compared to GM and Ford. And it was way outside the norm. One of the things I love about real estate, in particular single-family real estate, because I can look at a house, say I'm standing in front of a house, and the house needs a lot of work. Siding's all torn up, grass has grown over, trees are rubbing holes in the roof. And I can look at the house next door, and the house next door sold for $200,000. And the house next door to it sold for $200,000. The house across the street sold for $195,000. So what's the house worth that I'm looking at when it's all fixed up? It's probably worth $200,000. Why? Because all the other houses in there are worth $200,000. So if the house needs $50,000 in work, and I buy it for $100,000, I'm all in for $150,000. I could sell it for $200,000. I've made an instant $50,000 in equity. Now, if that house rents for, let's say, $1,700 a month, it's probably going to cash flow me about $300 a month. Now, somebody will say, well, Jason, how do you figure out how much it rents for? Simple. The house 2 doors down rented for $1,700 a month 3 months ago. And the house that backs up to that house rented for $1,725 a month and a half ago. I mean, there's not any surprises. And you know what's amazing? Real estate has been that way for 100 years. Real estate investors, there's not a lot of guesswork. Is there risk? Absolutely. Absolutely. Just like there is in any other investment, some risk. But you know what? Before I go and do the deal, I got the numbers in my hand. And the numbers are so easy. What am I buying it for now? How much is it going to cost me to rehab it? What's it going to cost in holding time? How much does my money cost? And then what's it worth when it's all fixed up and I want to rent it? It's literally all those numbers I can write on the palm of my hand. I don't, looking at, should I buy Tesla? Should I buy Apple? I sit there and read through those 10Ks and oh my gosh, they disclose everything. There's a rumor out there at Walmart. I read an article yesterday. Walmart is, and they haven't disclosed this yet, and I imagine they're going to have to. If the trade war starts with China, how much is it going to cost for them, for their suppliers to set up shop in manufacturing facilities other than China? And I imagine that's going to be material to their business, and they're going to have to disclose it. What's it going to cost? And if you own Walmart, what's that going to cost you? I have no idea. I don't even know how you evaluate that. In fact, the guys and gals, the team at Walmart are probably trying to figure that out right now with the CFO. But I could stand in front of a single-family house, and I can understand what it costs to replace the siding. And I can understand what it costs to paint it and put carpet in it and get a roof. And truth be told, I don't even have to know that number. My contractor, Fast Track, knows that number. I don't even have to know it. But figuring out the change at Walmart because there's a trade war about to start, I mean, I feel sorry for all the investors that are invested in Tesla right now. Guy starts tweeting and the stock starts crashing. Can you imagine that? That's your retirement. That's your means for financial independence. CEO takes to Twitter and it falls apart.
2 minutes.
Let's say you're invested in cryptocurrency. All of a sudden, that goes from $20,000, a random coin, whatever that is, to like $5. I mean, it's like, and I want to tie my financial success to that? That's insane. Or maybe it's not. That's what you want to do. That's great. But here's what I know. Over time, all of these things, all of these financial vehicles in the financial world eventually fall out of favor. Just start reading some financial books that are 50 years old, 60 years old, even the ones from the 80s. Those, quote, strategies don't work. How would you like to be halfway through your retirement and the strategy you invested in all of a sudden doesn't work? Now what?
1 minute.
For us, it's real estate. And I'll tell you what, it's worked for 100 years. It's one of the reasons why we have so much foreign money that chases after real estate deals in the United States. A lot of that money ends up in Texas. The question is why? Because it's worked for 100 years, and it's going to work for 100 more. We'll get back from the break. I'll wrap up today's show. Financial independence, easy versus simple. It's Jason Bible, Right Path Real Estate.
Mic's off.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts. Benchmark Insurance Group of Texas. 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before ever repair. Call 346-702-3825, or you can reach us online at foundationcheck.com. Hello, real estate investors. Do you need a lender that moves fast at the speed of a
What
jet
is-
to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets
$24
up a
a
repair
foot.
escrow fund to help you with repair
Let's look
costs.
at some pictures
Jet Lending
here.
is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage,
Oh, it's a
and we have
septic,
mastered
isn't
the
it?
30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract to close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at AndersonAdvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
You found or inherited a great investment
All
property.
right, 30 seconds.
Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
This is Business 1110.
All right, Jay, here we go. Hot mics.
Welcome back. Jason Bible, Right Path Real Estate. I got to tell you guys, we do the simple stuff. We invest the way the vast majority of millionaires do. We invest in real estate. It's a lot of fun. You get to improve your neighborhood. Huge social value in investing in real estate. You're taking one of the ugliest houses in the neighborhood and making it one of the most beautiful. You're putting a family in there that needs a place to live. If you're like us, you borrow money from our friends who are lenders like Jet Lending, or maybe some family through a self-directed IRA that happens to have their money at Quest IRA. We get to work with local contractors like Fast Track, so it helps their family. It's just a fantastic business to be in. It really is. We teach how to do all of this stuff. We host a free workshop. If you go to rightpathrealestate.com, you can sign up there. The workshop is tomorrow at 6:30 here at our offices, right off the Katy Freeway, just outside of Memorial Town Center, or City Center, Beltway and I-10. So if you want to come by and see the show, give us a call or go to rightpathrealestate.com and sign up there. We've also got another event that we do Thursday at noon. So those of y'all who can sneak out of the office for a little bit longer lunch, we do that here as well for our free workshop. Introduce you to investing in real estate the way that we do and our club members do as well. We have a lot of fun with it. There's a lot of value. You can build your wealth with real estate and become financially independent. And I'll tell you what, real estate.
2 minutes.
It's been the same for 100 years. This is not investing in a fad. This is not investing in this is not a get-rich-quick scheme. It's the tried and true, buying a house, get that all fixed up and rented, buying the next house, get all fixed up and rented, buying the next house. We really like single-family real estate as opposed to multifamily because there are a lot more single-family deals out there than there are multifamily. Hundreds of thousands of single-family deals that can be done in a year. But there's only about 100 in multifamily. So big fans of single-family, great way to build wealth. Tried and true method that's worked for hundreds of years as opposed to investing in the next Tesla or Twitter or Snapchat or any of that other stuff. It's a great vehicle for you and your family. It's great for your community. So come out, learn how to do it with us. It's Jason Bible, Right Path Real Estate. Just go to rightpathrealestate.com, sign up there. Tom will be on the radio show tomorrow for Build Your Team Tuesday. Tom and I will both be here on Wednesday morning. I will unfortunately be out Thursday and Friday this week. I will be at the Quest Expo speaking this weekend. I'll be at a mastermind group Thursday and Friday. So hope to see some of you guys up in Dallas for that event. Otherwise, we will see you at one of our events here in Houston. It's Jason Bible, Right Path Real Estate.
All right, Jay, have a good one.
Great. Thanks.